importance of vision is really key in developing any great business. Next, please. So our vision is to be one of the top 5 largest property companies in the Philippines by 2020. We only IPO'd in April 7, 2014. It was a pure vision IPO. We didn't have any of our malls under development. It was purely vision. We said we're going to build 1 million square meters, we're going to acquire 100, we're going to construct 100 malls around the Philippines. We had one piece of property, nothing under construction. This was April 2014, purely vision. And we IPO'd at 2 pesos per share, backed by that vision. So we had a lot of firm believers that really paid off for them. Today our share price is 31.95. It's a plus 1,498% where it was a little over 4 years ago. And that's because it wasn't just vision. Today we've proven the ability to execute. So these are where all of our properties are today and the different segments that we're in, which I'll talk more about later. But you can see pretty much from this map, we're all over the Philippines already today. So just 4 things I want to talk about today is really spotting transitions, identifying opportunity, being a first mover in what you're doing, and the value and simplicity. And these will all relate to the 4 segments that we're in. So spotting transitions. The largest piece of our business is really City Mall. So City Mall is a community mall chain that we're developing, and this was really most of the vision that we had in 2014 is to develop 100 of these by 2020. In the business world, the rear view mirror is always clearer than the windshield. So when you say, oh, we're going to build 100 malls, a lot of people say, you're going to build 100 malls in the Philippines? Already a place with all of these malls? You know? So sometimes, a lot of people don't really understand what we're doing. So you have to look a little closer in what exactly is it that we're building. We're not just building another mall. Sorry. Back one slide, please. Back. There you go. So City Mall is envisioned to be the largest branded, independent community mall chain in the Philippines with 100 city malls in operation by 2020. If you live in Metro Manila and have never been to the province, you most likely will have never seen a city mall. We do not build city malls in first-tier cities. We only build city malls in second and third-tier cities. In fact, we try to build them in lower second-tier and third-tier cities. So in the Philippines, there's more than 140 cities. We're building 100 of these city malls in lower second-tier and third-tier cities. These are the areas that are very unsaturated, are not presently serviced. 90% of the time, we're the first modern retail establishment in the cities that we build city malls in. So April 2014, 1 site. Today, 64 sites across the Philippines secured. All of those that are in red are actually already completed and are operational city malls. And all of those that are white are most likely under construction. So by the end of this year, we're most likely to have about 50 city malls already operational by the end of this year. These are the 26 operational malls that we have today across the different cities. So I'm sure a lot of you won't even know where these cities are. Kabangkalan, Victorias, Tagum, This is where we build our cities. This is the currently unserviced market that we're now servicing. So what is it that we're building? It's not just another mall. We're not an SM, we're not a Robinsons. We are simply just a community mall that caters to basic necessities. But the difference is, we're the first modern retail in the areas that we serve. So focusing on basic necessities, this customary mix of high-quality tenants provides complete and diversified affordable shopping options. So it's not a very large mall. We're not meant to be a destination mall. The cities we serve have a population of about 100,000 to 500,000 people. As you can see, 1/3 of the mall, typically it's a 1 hectare floor plate, 7,000 square meters leasable space. 1/3 of it is typically a supermarket. Because SMIC is an investor in City Mall, so in fact our partner, they own 34% of our subsidiary City Mall. You can see that a lot of their brands are present in our city malls. So 1/3 is typically a supermarket, that's typically Save More. You can also see the other SM brands here like Ace Hardware, BDO, China Bank Savings, Watson's, SM Appliance. They typically occupy about over half of the leasable space that we build. Then you'll see the Jollibee Group, typically occupying Food World, which is another 10%. So about 2/3 of all our city malls are occupied by our partners. And they are the best in category for the basic necessities and services that they provide to these type of communities. They are the modern version of what these communities already purchase today on a weekly basis. How do we build barrier to entry? Now, if the largest mall developers were able to land bank in these cities 5-10 years ago, we would have never done this. Why? Because it's hard to secure land. But it's because of the familiarity, the level of familiarity of our principals, having been the only nationwide group. The fast food group, if you go to third-tier cities, they're the only ones that have been operating in those third-tier cities in the last 5 to 10 years. They have the familiarity. So our chairman in Japsia started a brand called Mang Inasal, and he grew this brand in his mid-20s from one branch to 338 branches in the first 7 years of operations. It's in the same cities that we put up our city malls today. That's where he grew Mang Inasal. So Mang Inasal has been operational in those cities 5, maybe 10 years already. Jollibee has been operational in those cities, but none of the larger retailers, the SM Group, etc., have been operational in third-tier cities. That's the familiarity that we bring, and that's why we were able to acquire 64 sites in just a little over 4 years and build out already 26, going on 50 malls by the end of this year. This is how we build barrier to entry. It's not easy to acquire these sites. City Mall is a platform of modernization in provincial retail. Now I talk about the supermarket because that's really what we're bringing, right? 1/3 of our city malls is a supermarket. If you're from a province, you'll understand that in every province today, there's typically a family that has a supermarket. It's an unbranded supermarket, same size as a Save More, same size as a Pure Gold, but it's unbranded because it's typically run by the family from that city. Now, Mr. Sia grew up in exactly that environment. At 10 years old, he was a cashier in a supermarket that was unbranded. In fact, the brand was called Injap Supermart. And that's identical across any province. You'll see about 300 to 400 supermarkets today that are the size of a Save More and a Pure Gold that are typically owned by the families there. Those are the traditional retailers that we're replacing by bringing in this modern platform we call City Mall. We bring in Save More as well as the other basic necessities as well as the Jollibee Group all in one roof. And that's the replacement model. So that's the permanent replacement. We're not catering to new demand. We're not catering to GDP growth. We're catering to a transition in demand that already exists. So that's the importance of what we're building. So it's not about banking on future growth or more money going into the province. That's just gravy for our business. What we're really being is the replacement of traditional retail, the first modern retail. And you can see it if you notice in the newspapers today, a lot of these family-owned supermarkets are being bought out by the Pure Golds, bought out by Robinsons, etc. The reason being is because they can't get space. It's not easy. That's the barrier to entry in our business. That's why we position in 1 hectare prime, centrally located city center sites right across the traditional retailers because we are the demand shift, benefiting from this demand shift. Identifying opportunity. DD Meridian Park is over 5 hectares of space that we're building now in the Bay Area, in Manila Bay. So we're now one of the larger developers in that area. We're building 8 going on 9 structures. So going back to the quote again, if you want to grow, find an opportunity, from Jack Ma. Doesn't say find a big opportunity, find the best opportunity, it says find an opportunity. And we found an opportunity in the Bay Area. This is DoubleDragon Plaza. We completed it late last year. We only broke ground, I think, about 2015. So it's been 3 years. We were able to finish this structure. At the time, a lot of the brokers, when we said, we're going to build 8 office towers. 2015. Remember what 2015 was like? Everybody was scared, too much oversupply in office. Yes, we're going to build 8 office towers in a place that, well, BPOs really don't move to, the Bay Area. So, and everybody was like, why? But we built it anyway. But the best thing about building at the time is because nobody else was building. And so that's why before this even was completed, we are now 97% leased out in the 4 office towers, and we're talking about the next 4 office towers already. Because we built at a time nobody else was building because everybody was scared. But there's foresight and a little luck that now we're actually getting much higher yields than we expected because of the lack of supply at the time that we delivered these 4 towers. This is now the next 4 structures that we're building in the area. Phase 2, 2 more office towers completing by the end of this year. Phase 3 and 4 completing by 2020. One of those is actually Ascot BD Meridian Park. So it's a high-end service apartment. And then we also are looking at a grade A premium office grade building. Next. First mover advantage. Central Hub Philippines. This is our industrial warehouse segment. Now, if you talk to a lot of developers today, nobody really does industrial warehouse leasing. If you're competitor focused, you have to wait until there is a competitor doing something. But being customer focused allows you to be more pioneering. So, warehouses. Not that sexy, right? Who wants to build warehouses? Next, please. So we envision Central Hub to be the leading provider of industrial warehouses in the near term through the development of 8 major sites across Luzon, Visayas, and Mindanao. We want to be the largest, most dominant player in industrial warehouses. Yes, it's not sexy, it's not as interesting, but is there demand? We're customer focused. We all know that retailers have oversaturated first-tier cities and upper second-tier cities in the last decade or so. In order to continue the growth, and you know how much liquidity is in the financial markets are today, in order to continue that growth, they can't continue to build where they're building today. They have no choice but to move into second and third tier cities. Because of e-commerce threats, all of these things, they have to move out of the oversaturated marketed areas. And what will they need? Industrial warehouse space. So, we're trying to be pioneering in the sense of being customer focused. It's an industry nobody looks at. Why? Because, well, it's not that sexy. But it's fragmented. If you were a nationwide retailer today, you'd have to talk to 300 individual owners of warehouses in whatever cities you want to expand in. Do you think that's easy? Do you think it would be easier if you talk to one person who has a 10-year, 20-year plan on where these warehouses will be, who has land bank in these areas, who can deliver a warehouse in 4 months, who can talk to you about rates across different regions in one shot? I think that sounds like it makes a lot of sense, and that's why we're in one of the largest users of warehouse space is the Jollibee Foods Corporation. They need commissaries for all of their fast food. They have over 3,000 branches across the Philippines, across the different brands: Manginasal, Red Ribbon, Chowking, French Pizza. So we're building initially 8 major sites across Luzon, Visayas, and Mindanao. We already have 2 of these sites. Next, please. Our first tenant is Red Ribbon Commissary in Tarlac. So Central Hub will lease out standardized multi-use warehouses suited for commissaries, cold storage, manufacturing, logistics, and distribution centers. Next topic is the value in simplicity. So this is our hospitality side of the business. So I spoke about retail, spoke about office, I spoke about industrial, and now we're talking about hospitality. So this is the last leg that we're venturing into today. So we created this homegrown brand called Hotel 101. Our pilot project is Hotel 101 Manila. So I'll talk about the value in simplicity. Next, please. Complexity is your enemy. Any fool can make something complicated. It is hard to keep things simple. That's from Richard Branson. Next. So what is Hotel 101? We tested this formula of creating what I enjoy calling a synthetic hotel REIT. So we built a hotel in Manila called Hotel 101 Manila. It's right beside Mall of Asia. Has over 500 rooms. But the unique thing about this 500-room hotel is every room is identical. There is no suite, there is no junior suite, it's all the same room. You need to walk up to the front desk and say, do you have a room or do you not have a room? There is no facing the bay, everything's the same. So this is why it's akin to share of stock in a hotel, because what we do is we pre-sell all of the units during the construction period. This practically funds most of the actually all of the construction, plus gives us a margin during the time that we're building. And then after that, the unit owners have to turn over all of the units into a management contract with our wholly owned subsidiary. So we manage it as a hotel. So there is no option for you to use it or to bring it over. So it's basically tied to a management contract. So it's not like a condotel where you have the option to live there. You cannot live in these units. It's tied up to a management contract and it will be operated as a hotel when it's finished. Now what do you get in return? We fit it out for you and we operate it as a hotel, and you get 30% of gross revenues. That's top line. So you don't have to deal with whatever operating expenses we're paying for. All you need to see is, do you think this property can catch this room rate? What occupancy rate do you think this property can catch? And you can pretty much calculate your yields. So we deliver value to our stakeholders. For Hotel 101 Manila, which is just a pilot project of ours, our stakeholders in the last 12 months, and we just opened this is our first hotel. It's a new brand. Obviously, we're marketing it ourselves. Our stakeholders were already able to get 6.39% yields in their units operated as a hotel. That's pre-tax, and it's deposited into their account on a monthly basis on the 16th day following the end of the month. So it's simple. We give them a report. This is how much the occupancy rate was. This is how much the hotel generated. We distribute 30% to all unit owners, regardless of whether your unit was used or not. So it doesn't matter because you own part of the hotel. And what do? We build sustainable recurring revenue. So we build these hotels really more for the recurring revenue. Why? Because the management contract is 50 years and renewable with us for another 50 years. And so this is how we build recurring revenue. We get to keep 70%, we spend on the operating expenses, and we're targeting a margin of about 10% of total hotel revenue. So one, we've now just grown our room base without any capex, because we sold all of the units, right? And then two, we've now been able to get recurring revenue, basically to perpetually, without having to, while we're delivering value to the stakeholders. So this is how we're looking to also play a dominant stand in the hospitality industry. Today we have 867 rooms. We're now we have another almost 3,000 rooms in the pipeline. So we're looking to have 5,000 rooms by the end of 2020. This is Hotel 101 Fort. As you know, there are no 3-star hotels in the Fort. Why? Because the land values there are about 1 million pesos up, I think. But so we will be building the first and maybe the only 3-star hotel in the Fort. And so we're looking at this catching quite a lot of interest, especially when it's finished. We just launched this project last month. We already sold over 25%. So why? Because we keep it simple. All the rooms are identical. Regardless of whether your room was used or not, you get your dividends. That's how we deliver value. So it offers a secure passive investment because you hold title to it. similar to any unit, except you don't have to manage it. It's not an active investment, but you will get pretty much the same yield as if you bought a unit and looked for someone to rent it out. But then you'd have to deal with all of his complaints, all of the maintenance, all of the repairs. But with Hotel 101, we do all of that for you. So you just buy a unit and we'll take care of it. So it's investing made simple. And now we're building Hotel 101 Fort. We're going to build one in Boracay, Bohol, Davao, and we're expanding this quite quickly so that we can scale up to 5,000 rooms by 2020. To me, ideas are worth nothing unless executed. They are just a multiplier. Execution is worth millions. This is how we've executed. April 2014, we had 2,000 square meters of leasable space by the end of that year. End of last year, we had 332,500. End of this year, where we have visibility on what's going on, we will have 600,000 square meters in our portfolio, and by 2020, we will have 1.2 million square meters. That's how you execute vision. I believe you can be successful in whatever you do if you do things fair and square. My life so far, and the way that I've been blessed with success, is proof that you don't have to trade in your values to achieve great things. Now, this quote came from my favorite businessman, Injap. So, inspired vision, passionate execution. This is the DoubleDragon way.